Back with the market right here in ET now. A record high market, the equity markets that is, and record highs when it comes to the PE world as well. We've seen the highest amount of equity fundraising of late. The PE deals, in fact, have made a record high of about $18.6 billion in the first half of the fiscal alone. So let's take this conversation forward and try and understand the nature of the PE investment and the flavor really right now. Gautam Mago, General Partner at A91 Partners, joins in on the show right now. Gautam, hi, good morning. Good to have you on the show. PE investments, Gautam, clearly at a record high. Markets as well have seen a clamor for these new IPOs that one is seeing. What's happening here? What's aiding all the optimism and sentiment?
Thanks for having me. I think there's two different aspects of the private equity market. One is the venture side of the business, which is much more fast-growing technology type companies, and then there's the more mature private equity type businesses. I think you're seeing, I guess, what you're seeing in the public market is really reflected in private market. So to that extent is no different. I think on the IPO front. Look, all of the companies that are coming to market today are fructification of what's been built over the last probably 8 to 10 years. So it's not necessary. The fundraising of today is not reflective of the IPOs of today. I think where it is linked is that certainly there has been proof points now of being able to many times over. This has been proved that you can build modern companies in India, take them public, and return your money to your investors. So that is some part of that is fueling new investments. But I would delink the two a little bit. I think the companies coming to market are not a function of today, but a function of the last 8 to 10 years.
Interesting. You have a unicorn like Digit Insurance, Gautam, in your portfolio. How is it that you see the entire financial space evolving with now banks collaborating with Fintech and just so many digitally enabled financial services out there already in the markets and the ones who are waiting to IPO?
Yeah, it's a good question. And honestly, we do think about this a fair bit. I think the answer is complicated if you look forward 5 to 10 years. Certainly, all kinds of financial services, will be more digital. We've seen that with Digit. The proposition to the market is very clear. It's very it's very, very digitally enabled, even though they are very omni-channel in the way they source their business. I think that to some extent it's possible that the consumers have moved ahead of some of the incumbent financial services companies, and therefore you're seeing some of the incumbent financial services companies partner with fintechs to provide more modern experiences to their consumers. I will say that we have lots of very good entrepreneurial financial services businesses in India, so I don't expect them to sit back. So my sense of the next 5 to 10 years in financial services, it's quite good to be a consumer because you will get good number of offerings. Many of them will be more convenient, more modern than they were. I don't think this will be an either-or answer that the incumbents will win or the fintechs will win. I think you will see all variety of sort of partnerships and models that will succeed. But the fact of digitization is not going away and it's not rolling back. And honestly, the level of convenience it offers is dramatic. So there's no reason why it should. So I didn't directly answer your question because there is no easy answer, except that I do think the next 5, 10 years will be very interesting and you'll see lots of approaches. And you'll see, I think, consumers having a lot more choices.
Okay, and I think, Gautam, you seem to be playing on that. Hi, this is Mubina as well joining in. When you say consumers seem to be will have lots of choices, looking at some of the names as well that you have, very interesting mix, the kinds that offer very differentiated products and services to customers. But if we have to just recap this year gone by, where we've seen a plethora of unicorns being created, most of them seem to be in EdTech. In SaaS. Yes, we do have a few consumption-oriented names like maybe a Grofers or an urban company. So do you see that maybe this is the space, the FMCG-oriented space, that we could see the next set of unicorns coming from?
I think you will see some. I think fundamentally consumer products type businesses, whether they're online or offline, lend themselves well to endurance and good returns on capital. They may not necessarily grow as fast as sometimes tech firms do, because I think clearly what you've seen with the education is that, and actually lots of services, any kinds of services, is that COVID has pushed the digitization. I think on product consumption, digital native firms, a lot of which are in our portfolio, like Sugar or Happilo or Atomberg, and a few others that are not yet public. Um, you you are seeing that share is shifting online, and people have to be nimble. At the same time, what you're selling is a product and not a service, so it still requires physical transportation. So I think the share shift to online has not been as significant as it has been in services, but it is secular and will continue for a while. So I think the answer to your question is yes, but I don't know if it happens in 1 quarter, 2 quarter, 5 quarters. But if you look for the next 5 years, we think a large number of new consumer product type companies should come out of the venture and private equity stable and become public.
Yeah, I think it was the perfect storm of sorts that was created for EdTech as well. That trigger which really pushed all of these digital-oriented services, which could erstwhile, which can now of course be offered during the exceptional times that we were in, and perhaps we'll wait for something like that in the food business as well. Gautam, as a PE, as a VC investor, you have your ear close to the ground. What kind of startups are sprouting up? What's the hottest sector today? I mean, EdTech, of course, is something that we've widely spoken about and how it's created the most number of unicorns. But do you think it could be something in the new energy space? Because as a PE and VC investor, you are able to catch that emerging trend, that disruption earlier than perhaps other retail investors.
So I think the short answer is honestly everywhere, and I'll maybe spend 1 minute at the end on new energy, in which I am acknowledgedly not anything of an expert. I think across the board, from internet to edtech to financial services to software to healthcare, we are seeing a sprouting of lots of startups. There is certainly 1,000 flowers blooming, when maybe 2-3 years back there were 100. As is the nature of these things, not all of these will grow up to be big companies, but I think the quality of the flowers that are blooming today is very good. So hopefully more number of them will. I think new energy is a more specialized, unique space, and historically has not been the most fertile ground for venture capital, because it is not as prone to fast experimentation cycles, and it takes a long time and often lots of capital. And certainly, when it comes to renewable energy and solar and so on, it's not like we are anywhere close to experts there. But certainly, you are seeing. I'd say the one part of the new energy space where you're seeing reasonable early stage activities is around electric vehicles across all parts of the value chain, and across all types of vehicles, whether it's passenger or commercial, and whether it's big format or small format or middle-sized format. I think there is things that will emerge there. I would expect some of those to go on to be very material companies in the next 5 to 7 years. The rest of new energy, honestly, I can't comment too much because I don't know a lot, but certainly in EVs, we do see a lot happening. And maybe one thing that has changed is that I think it is still a more capex intensive business than many of the other sectors. But I do think that the price parity and the cost structures are now making it far more competitive with traditional ICE products.
Absolutely. Gautam, thanks so much for sharing your insights. You're playing in a lot of sectors that are booming and are growing very, very fast. So we look forward to speaking to you really soon. On that note, let's